wonderful insights. I've got to say it. Not a great name right now for an airline. Delta. I mean, it's my turn to have a look at the charts, and I hope you're seeing my right screen, my correct screen. If that's not the case, please let me know. I've got Aussie yen on screen at the moment. I'm looking at the weekly chart. The weekly chart is telling me that Aussie, and I heard a few people talking about the Aussie and where it's headed and all the rest of it. Great question, in my humble opinion, because there are technical and fundamental factors affecting that, as would be the norm. I see potential here for a rally on Aussie yen. Now, the Aussie's been the weakest currency on the charts for the last couple of weeks, actually. Where is that buy point? Julian was asking that question earlier, and really, against the dollar, I think it's probably 70 cents, but who knows? I've got, however, a very, very nice, pardon me, confluence going on here with, this is the weekly chart I'm looking at. Key reversal bar there on the week prior to last week, and then an inside bar at a support level and a confluence of support here. We've got a horizontal level here around about the 79.80 mark. As I've got it, we've bounced off that already. We've got a channel heading north that has been broken and retested and rejected by that bar. And the only real issue I've got here going long would be that 82 level. But I think if we can get in around about, the 80, 50 mark, I think that's probably a reasonable thing to be looking at this week. We are coming off that level. We've got a higher high in place. We've got a higher low in place. And I think this could well be a point in the market where we can look to buy Aussie yen. So that's the first of my analysis. Second is CAD Swiss. Very, very similar chart in many ways. And I really haven't put too many lines on here. But those of you who are chart pattern enthusiasts will probably recognize this particular scenario that I will draw for you. That's a terrible color. Let's get rid of that. Let's go with white. You've probably got that in your sights, which was broken and now retested. Ascending triangle, call it what you want. It's high highs and lows at the end of the day. After that breakout, we haven't really seen too much. And now we've got that big rejection bar on that breakout level, which is, as I say, around about the 72 cent mark. I think that's a real good indicator as to what's next to come. How do we get into the market? Well, that's the weekly chart. You could actually trade that bar if you so chose. Your risk to reward on that's not fantastic, of course. But if you drill down into the smaller timeframes, you'll probably find something that works well for you. What I see already is a complete false break of a trend line, or a trend line as I call them, going through here. So an entry there and a stop loss here makes sense to me as well. There's probably better opportunities on a smaller time frame, but that makes sense to me. So if you want to follow that CAD Swiss, I think it's probably not such a bad idea either. Euro Kiwi is the third of my, well, I won't say choices, I will say interesting pairs. This one's telling me that the week before last, we had a big key reversal bar, not quite off the resistance level that I've chosen there, which is around about 170, 150. And then we've had, again, an inside bar based on that reversal bar. I know we've had high test bars, low test bars, and they're all over the shop here. That's true. But what this actually tells me is that we've come off the top of the range here. So if you can imagine the range top is in that vicinity, then we've come off the top of that range, and we're probably going to have another look at the bottom of that range at some stage, which is anywhere, take your pick. There's a lot of levels there. So really, I'd be looking for a lower high in this vicinity come Tuesday, maybe even Wednesday. We'll see how that pans out. But if we do get that in this vicinity here, I think that would be an excellent opportunity to sell. what is it, Euro Kiwi. Maybe we've already got something like that on the 4-hour chart. We've had a big rejection of that level, same level I just spoke of, 70.50. You can see how we had a false break of that level, and since then we've been unable to get back above it, certainly no close on the 4-hour chart. That candle's really interesting to me because I do like to have a bullish bodied bar that is also a rejection bar. Could well be a lower high here. Monday mornings is a really, really difficult time for me to trade 4-hour charts, I've got to say. Not so much because I don't like the scenario, but what I don't like is the fact that the market could gap in the meantime and completely destroy that scenario. But what I would be looking to do come Tuesday on the daily chart is to look for that to be a confirmation of that lower high. Now I'm going to go to something that I actually hate to trade, and it's dollar yen. I think it's probably the hardest thing that I can do in a month of Sundays, this being one of them, and the first of the month. It looks even more vexing to me, and I'll tell you why. The reason it looks a little bit vexing to me is we've got well, in my opinion anyway, we've got a clear confluence of price here, or of levels here rather. The one thing that really disturbs me is this looks like a very, very clean false break, if there's such a thing, of that resistance trade line. It's also come off a horizontal level, given us a lower low. It hasn't really given us a lower high, which is interesting. But my criteria for a false break is fulfilled here, and with the retest of that resistance trade line, or trend line, probably is as well, that looked very much like a potential not continuation, even reversal, if you like, of current momentum. That said, I've got a similar candle pattern to what I've just described in two of those previous charts that I looked at. Big key reversal bar here, and then another inside bar here. That always gives me the impression that the market is going to go with the reversal bar. In other words, long here. It is vexing, as I said, because I've got that clear false break. But overriding that to my mind is the fact that we're continually now getting after that big bull rush, higher, 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 low, higher, 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 low, and we bounce off the bottom of that channel. I think it's reasonably safe to get an entry above that seller bar, because if the sellers are truly in control here, then the price goes south in concert with that false break that I've noted. But if that's not the case, then something else is afoot, and the buyers should come back in here and take us to at least the top of that range, if not that high. And if we take profit before that level, I think we'll be in good shape. So they are the four that I think are worthy of our attention this week: Aussie yen, CAD Swiss, Euro Kiwi, and dollar yen. I say that with clenched teeth because I think it's the hardest of these currency pairs to actually trade. And again, I've got a bit of an argument about whether we're going north or south, but it's a matter of, if we don't go south, then I think we're going north, and that's the key. Righto, I would very much like to thank all of the participants in today's show, and in particular Gordon for joining us for the first time, and we hope that's going to be a regular thing in our weekly market update. Thank you for your company, and we look forward to it throughout the week, when all the shows, as always, will be advertised on social media. Have a great week, everyone. I hope you got some good insights out of the show. Have a good one. Bye-bye.